Welcome to the Zions Bank Economic Update. I'm Robert Spendlove, the Senior Economist for Zions Bank. So today we saw a stunningly strong U.S. jobs report, something that no one was expecting. To put it in perspective, last month we saw a dramatic decrease in our U.S. job market, losing 20 million jobs. The expectation going into today was that we would see another loss of almost 8 million jobs. When the report came out, it surprised everyone, and we saw an increase of 2.5 million jobs. It really does represent a dramatic shift in the economy and also in our expectations. Similarly, when we look at the unemployment rate, last month it was 14.7%, the highest that we've ever seen since the Great Depression. And the expectation was that we were going to see that unemployment rate rise up to possibly 20% or more. It actually came in at 13.3%. So the unemployment rate actually dropped last month. We saw strength in a number of different areas. The labor force participation rate, again, we were expecting it to drop to about 60%. It rose a little bit to 60.8%. When we look at some of the specific industries, we can see the kind of strength that the economy is experiencing. Most notably, leisure and hospitality. The leisure and hospitality sector saw a very strong rebound in the month of May. It's dropped over 7 million jobs in the month of April, but came back by 1.2 million jobs in the month of May. Now, one of the reasons that we're seeing strength in the leisure and hospitality is because of the unprecedented actions taken by the federal government in response to the coronavirus. Whether it's actions by the Federal Reserve has dropped interest rates to zero, has opened up lending facilities, and has encouraged banks to really take advantage of their full resources. But also, Congress has taken dramatic action through the CARES Act, and specifically through programs like the Paycheck Protection Program. The Paycheck Protection Program is responsible for saving literally millions of jobs. And one of the reasons why we may be seeing this unexpected increase in this employment is because of those benefits. It enables employers who have been impacted by the coronavirus to keep their employees on the job and to prevent them from being laid off. So under the terms of the Paycheck Protection Program extension, while before the original PPP, business owners only had 2 months to use the funds that they were getting. Now they get up to 6 months. Also, under the original PPP, 75% of the funds had to be used for payroll. And now there's more flexibility. Now it's only 60%. So Congress has been very responsive to the needs of small businesses and to the needs of the economy, not only in creating the CARES Act and having the PPP program and also the Main Street Lending Program, but also providing the flexibility to adjust the program as needed to really provide that economic boost. And so what we're seeing from our jobs report and from some of our initial economic indicators is that these actions are having a positive effect and will continue to have a positive effect going forward with our economy. Thanks for watching. I'm Robert Spendlove with Zions Bank.